Hey there, my name's Curtis Lucas and you're watching Empire Building.
Tell me, do you know what day it is? Remember, the 5th of November.
Remember the 8th of November, as it were in this case. We are witnessing one of the most defining moments in the history of Bitcoin and cryptocurrency. First off, obviously, yeah, I was completely wrong about my call that the bottom was in.
You think you're such a
Although, I mean, in my defense, there's no way anyone could have predicted this. And especially the timing at which it occurred. I mean, for one, I was actually correct about the outcome regarding the CPI numbers that came out. They were, in fact, lower than anyone was predicting, and we witnessed a large rally in the stock market, especially in the NASDAQ. I was anticipating that would have Bitcoin and cryptocurrencies would have capitalized on that, which could definitely have sent us higher. If it weren't for this FTX crisis, I have no doubt Bitcoin would have seen itself well above $25,000 by now. But there's no sense crying over spilled milk. What I want to focus on now is understanding the ramifications that this now presents. What does this actually mean for Bitcoin? Is Bitcoin dead? Has it failed in some way? And let's check our mindsets again against that mentality as investors, as adopters of this technology. It's been a roller coaster of a week, and to be honest, I don't have any fail-safe, perfect strategies for getting through this. But I do know that we will get through this. For all we know, the bottom is now in. But I do see there are a lot of people calling for $14,000 in Bitcoin, $12,000, $10,000, even lower in some cases. To be honest, and I'm just going to be honest, I don't know. But I really don't want to focus on that. In this video, I'm not even interested in looking at the charts. There'll be time for that later. Right now, I think the more important issue at hand is to focus on the lessons that we're learning right now. My heart goes out to all of those that have lost funds with these centralized exchanges. All those users who trusted the Sam Bankman-frieds of the world and BlockFi. When we were told that the institutions were coming, it came with the promise that they would bring a certain level of maturity to the space. But unfortunately, all they've done is brought more chaos. And the sad thing is that the warning signs and the warning messages about these outcomes came a long time ago. For a long time on this channel, I shared a lot of the teachings from people like Andreas Antonopoulos. And I'm going to share a quick clip of him addressing this exact issue back in 2014 in front of the Canadian Senate.
In the traditional banking environment, unless you hold cash, every account that you have as a consumer is a custodial account. That means that the account funds are held in trust by a bank, and what you have in return is essentially a promise note that that money will still be there tomorrow morning. The bank controls the funds entirely. Bitcoin allows a much more varied range of control between a consumer and a financial services institution that they may use, from completely decentralized control where the consumer or end user is the only one with full control over the money, to complete custodial accounts where a financial services institution has full access to the keys and the consumer has none. In between, there are also models that are hybrid, where the bank may have a signatory role but not be able to change the direction of the funds, simply to approve transactions. And so within this very broad range of possibilities, obviously some aspects of that do need to be regulated. What I mean by that is, if you simulate a traditional financial environment with a custodial account where you take full control of a user's funds, then those funds are now outside of the Bitcoin security model. They are no longer protected by the user's control of the keys. They're no longer protected by the blockchain. They are now in a gray area where they're not covered by regulatory requirements for capital adequacy audits, security requirements and controls, etc. But they're also not covered by Bitcoin's security model. And we've seen that whenever that has happened, it results in disaster. Almost all of the exchanges that have been attacked in Bitcoin had a full custodial model like that. However, that is not the only model that exists. There are digital Bitcoin wallets where the user has complete control. There are wallets where the user has complete control, but transactions cannot happen unless an additional signature is placed by an institution that acts essentially as a risk manager to ensure that even if the user's systems are compromised, their money can't be stolen, a hybrid model. If you lump all of those together under a single unifying regulation, assuming it's all just like a bank, then you miss out on the opportunities to create better solutions with this new programmable money. So I do believe that certain models of Bitcoin use must be regulated. If control over the user's funds has been centralized, then that institution puts consumers at risk. But to lump a decentralized model where a user still has full control over their funds and an institution can't steal their money under that same regulation is not only misguided, but doesn't leave any room for that technology to develop further.
At this point, it's embarrassing to see these situations still playing out today. To have to see these lessons still being learned. And unfortunately, I fear that the regulators are going to miss the lesson. But I'm not going to dwell on that too much right now because I still feel confident that the example set by decentralized exchanges and other technologies that allow users to retain control of their funds, utilizing the technology instead of having to trust in intermediaries. That was the promise that Bitcoin first provided us. And time again, the weakest kinks in the armor of this ecosystem has surfaced from these intermediaries. And unfortunately, this early in this adoption phase, it is a risk that we have to contend with. Obviously, we all bear the burden of this risk in the form of price declines. But I, for one, learned this lesson back in 2018 when a Canadian exchange, which thankfully I was not a part of, collapsed under the exact same scenario. CX Quadriga, if I remember correctly. Only in that case, the CEO actually passed away in India, which led to massive conspiracy theories. And yes, all of those users lost their funds as well. And while, yes, I mentioned that if it weren't for this, if this did not come to the surface, I have no doubt Bitcoin would have been well under its way above $25,000 again. However, the downside here is, had that happened and these shenanigans had not been exposed, then we'd only be suffering these consequences at a later point down the road. If there's ever a time to shed this kind of contagion, the time is now. I can't help but wonder, when I do look at this price action, and we'll talk about this a little bit more in another video, but I just wanted to get these thoughts out. This market is trying to digest a lot of information that is coming at us every single second. It is impossible to keep up with it all. What you have to remember is that it is trying to, the markets right now are trying to price in the worst possible scenario. And to be honest, we don't know what that is. For all we know, tomorrow morning, we wake up and find out that Tether is collapsing. Now, I don't want to be the spreader of that kind of FUD. And it actually has shocked me that Tether, despite all of the rumors and legitimate criticism surrounding it, it has yet to fall. Is that going to be the final shoe that has to drop for this to be over? I don't know. But in my opinion, that probably would be the worst case scenario if I was forced to point to one. And for those of you that haven't been paying attention, Tether is tied to Binance, who for some people, he's the villain right now, and for some people, he is the hero. I don't really look at him as either. He is definitely a main character in this story, but I don't think he was a mastermind behind any of this. I certainly don't think that he orchestrated any of these outcomes. I think that he is just another player in this ecosystem that is acting in his own best interests, or reacting to the information in much the same way we all are. But I can tell you one thing with absolute certainty. On the Bitcoin blockchain, blocks will continue to be produced on average every 10 minutes. The protocol will continue to function as it was designed. Even if every single exchange goes bankrupt, Bitcoin will continue to operate. Therefore, the miners will continue to operate. And that's not to say that there isn't some contagion fears there. Clearly, there are some issues with the balance sheets of some of these miners. That is the most important thing that we all need to be looking at right now. There will be winners and losers in this space. And before long, we're going to find out who they are. There's definitely a risk associated in investing in these companies at these stages. But that is where the reward comes. And it's up to us to do our jobs and assess those risks if we choose to invest in them. Needless to say, I've been very frustrated this week with the way this has played out. It's embarrassing, to say the least, to see that this industry still has not matured even enough to meet its most fundamental ideals. But because it is an open and free market, and there is nobody coming to rescue us, there is nobody coming to bail these companies out, the contagion will not persist. I have full faith in that. The best thing I can say for right now, in terms of trying to time any of these market moves in the coming weeks and even months, is to be extremely careful. If you're expecting to be able to fully exit this market today and get in at a lower price in the near future, there is a high likelihood that you will just end up buying in at a higher price if you haven't already experienced that already. At this point, the best strategy that I can think of is to simply sit still. Of course, the old adage does say that the best time to buy is when there's blood running in the streets, even when it's your own blood. So that is what I'm prepared to do. Assessing your own risk is all you can do for yourself, but maintain a long-term time horizon. And rest assured, when all of this is over, Bitcoin will still be here, and I plan to as well. That's all for this one. Now let's get back to empire building.